sake, 8. And there's $1 trillion here. And then we've got a level here at 7,000. And there is $5 billion. Which one's more important? Which one's more important? No idea. Right? Absolutely no idea. Why? Well, first of all, are they zeros or are they long-term options? So what would make 7,000 more important than 8,000? What are the two things that would make, or possibly, well, two things that would make 7,000 more important than 8,000? Well, the two things that would make the 7,000 more important would be the price and, of course, the expiry, correct? So these are the two things that would potentially make the 7,000 more important as a level, because obviously the idea is that we're trading gamma, the gamma flow of markets. And, obviously if the price was coming into expiry, so for argument's sake, expiry on the 7,000 was here and expiry on the 8 trillion, the $1 trillion was over here, of course that means that the expiry on this is a lot more relevant. The second thing that makes it relevant is where the price is. Because obviously if this was a 0 day to expiry, and this was a 0 day to expiry, if the prices are trading up here, of course the $1 trillion is going to be massively important, because every tick up is going to be a massive gamma, right? Every tick up is going to be a massive gamma. But let's assume that's a 0 day to expiry price up here, a 0 day to expiry, and this is a 0 day to expiry here, right? But the price is here coming into expiry. What's the gamma on this 8 trillion? Sorry, this is $1 trillion. Is it high or low? Is it high or low? It's low. The gamma is going to be very, very low in this because the change in the delta is now, for call options, the delta is what? For call options, the delta is 0. And for put options, the delta is basically just a 1.0, right? So it's dollar for dollar. It doesn't change. It's now fixed at that price. But obviously, if we're coming into expiry here, the chance of this then pinning this price on the basis that this could go in the money at any moment, this is going to be explosive here, isn't it? This potentially could be explosive, and the way the dealers try and avoid that explosion is to pin the price at this price point. And because their idea is to pin this price, because if they go above here and it sticks, they've got to buy a lot of stuff. Very, very short-term expiry available, right? They've got to buy a lot of stuff, and that can cause a very explosive spike, which is why this just rarely happens, and this is why we get a thing called pinning risk. And so we get this concept of pinning risk, where the dealers will basically try and pin the price to here so that they don't have the explosive nature of having to buy above or sell below with almost no time left to hedge out an expiry. If you know that stuff, then obviously you can understand levels properly. If you don't know that stuff, then you perhaps need to have a little bit of a think about why you would use any of these kind of things, so you can properly understand how to use some of these keys